Assalamu alaikum, everyone. Great to be here. Thank you, Zafar Saab, Munir Saab, and everyone here for inviting me. What a great event. I had a chance to talk to many of you last night, and I can feel the excitement in Pakistan right now and with the opportunities. So what I'm going to talk about today is, as we said, understanding digital currencies and specifically, more broadly, the future of money and its implications and opportunities for Pakistan. Okay? So let me start off very quickly, right? The biggest mistake that most people make when they think about digital currencies is that it's a replacement for cash, right? It's easily transferable, it doesn't degrade, it's easily trackable. All of those are right. But the thing is that digital currencies aren't just about replacing cash, right? So they're not. They're about making money programmable. What does that mean? We're going to talk about that in a little bit right now, but just moving forward, if you look at the evolution of money, right? We start, physical cash has been around for centuries. We then got into electronic banking, where the value was held in, ledgers in some mainframe somewhere. We then got into mobile payments, and as we've seen, mobile payments have really spread in Pakistan quite a bit. And now we're at the, we've got pretty significant digital currency adoption, the number 3 in the world, actually, in Pakistan. And now we're at this point, I don't know if this works, but where we are at the cusp of both programmable money and AI-native finance, right? So most of these other steps took a decade to happen, and then these two are happening together. Now, before we get into those two things about programmable money and AI finance, let's talk a little bit more about the digital currencies and the landscape. Right, so if you look at categorizing all digital currencies together in sort of two quadrants, right? We look at the horizontal axis, centralized versus decentralized, and the vertical axis being state issued versus privately issued, right? So you've got your top left right there, which is central bank digital currencies, right? Those are centralized, state issued. We've got a huge pilot which has been going on for years, multi-billion dollars of transactions in China. You've got the e-rupee in India. You've got the digital rupee pilot that started in Pakistan. So a number of things happening on that front, right? Now, if you go the opposite route, which is decentralized and privately issued, you've got, Bitcoin, Ethereum, which are volatile, and, the exact opposite space. Now, interestingly, you've got this white space up at the top, which is decentralized state issued, and that's going to stay white space because no state is going to issue money that they can't control, right? So that's there for a reason. But the most interesting one here is this last one at the bottom left, right? Which is privately issued and centralized. So that's where you have both stablecoins, primarily Tether and Circle, and then you've got tokenized deposits and bank money. So let's talk a little bit about, and then if you look at the overall landscape there, the state of play, used to be at 134 countries that were exploring CBDCs. Now it's up to 146, actually. 3 have actually officially launched it. You've got Nigeria, Bahamas, Jamaica, about 300 billion in stable coins outstanding, 99% dollar pegged. And then, as we said, Pakistan is number 3 in global adoption. So the debate that's going on right now is, people are saying whether the economy is going to move, the world economy is going to move towards CBDCs versus stable coins. And, you can see the interesting thing, the facts about each of them up here, right? CBDCs are issued by the central bank. Stable coins are privately issued. The banking and risk is sovereign, although stable coins have reserve assets, primarily the dollar. The CBDCs can be programmable by the state, whereas stable coins can be programmable by anyone. And they each have what they're good at, right? Tokenized deposits is something that's becoming much bigger, and something that the banks here should really take a look at, because that's the one place where both the programmability and the deposits both belong to the bank, right? The deposits stay on your balance sheet; they don't leave your balance sheet. So it's something that we need to be looking at more closely. So like I said, Stablecoins and CBDCs are what gets all of the mileage, but tokenized deposits is where you guys should be, spending your time thinking about. Now, if you look around the world, we'll see that, one of the biggest things that happened last year was the US Genius Act, which really regularized stablecoins in the US. But there's, pilots and things like that going on really all over the world, right? We saw 146 CBDCs in pilot. India has a live e-rupee. Bangladesh, Pakistan just started its digital rupee pilot. UAE, Singapore has an M-Bridge, Brazil. So it's, this is not something that is on the fringe, right? Everyone is working on it. And like I said, the pilots and actual launches are at various stages in each country. Now, while the whole debate is about CBDCs and especially CBDCs and stablecoins are actually winning, right? So the interesting thing is, if you look at the current run rate in terms of volume, right? 33 trillion was moved last year on stablecoin rails, $33 trillion. And if you look at the current run rate right now, it's, the volume of stablecoins is more than 2x Visa and MasterCard's combined annual volume. So we're not talking about something fringe, we're not talking about something, at pilot stage, we're talking about very real transactions. 2x the volume of Visa and MasterCard combined, right? And 90% of that market cap is held by two private companies, right? Tether and Circle, USDC. Interestingly, also, it's not just that it's being done by people. AI agents are now using stablecoins as well because they can't open bank accounts. So Coinbase has X402 standard, Google has AP2 settlement agents. $165 million of payments have already been done by AI agents, right? So that's the other, interesting thing with stablecoins. So as I said, so the key takeaway from this slide is that this is not just something that's, nice to have or being looked at. This is very real at this point. Now, I promised you guys I would come back to programmable money, right? Because what I said, stable digital currencies enable is programmable money. What does programmable money actually mean? It means, for example, that you can have things like conditional transfer, right? Funds only move when a condition is verified. The delivery is confirmed, invoice is matched, right? So you can actually have conditional transfer. You do atomic settlements, which means that the payment and the assets move together or not at all, right? So reconciliation simply disappears. You have built-in escrow, right? So you don't need a third party or counterparty risk. The code holds the funds. And then you can even do things like streaming money, right? Salaries that accrue by the hour, aid that releases by milestone, rent that meters by the day, right? So these are all things that you can do with the money itself. The money itself is no longer just a dumb asset that has to have all this logic around it. It's actually programmable. And that creates a world of opportunity for places like Pakistan. So now, if you think this is esoteric, think about a letter of credit, right? A letter of credit is essentially a 400-year-old programmable money, but in a paper format. What a smart contract does is that it enables you to do it in seconds. That's the opportunity. So what does this mean for Pakistan? What it means that I just came up with kind of 5 products that Pakistan could ship using programmable money almost immediately, right? One is the Benazir income scheme, which targets 9 million families. You could do targeted social transfers, which are where the money is programmed to be spent only on food, fertilizer, or school fees, and nothing else, right? So you could have 0 leakages. You could do parametric crop insurance, where a particular rainfall date, if it's too late, triggers automatic payout, so you don't have claims processes, adjusters, delays. You could have tokenized trade finance, so letters of credit as code, documents, verification, payment releases, atomic delivery, all happening as part of the programmatic money. You could have programmable zakat, right? So disbursement rules, full audit trail built into the money itself. And here's another interesting one, right? Remittances with rules. So money coming from, say, Dubai converts as a locked rate and lands directly as mortgage payment back home. The opportunities are limited only by your imagination, right? That's the opportunity that programmable money does. And it allows us to, just like we bypassed the physical phone infrastructure with mobile phones, and in some senses we bypassed a traditional payments infrastructure with things like EasyPasa and whatnot. We have the ability to bypass traditional modes of finance with programmable money here in Pakistan and be a leader. So the other interesting thing is that every one of these runs or rails Pakistan already has, right? Rast, mobile wallets, another identity, these are the opportunities. So now the next point after this is that once you have programmable money, you can now not only have people use it or program it, but AI agents can run the logic, and you can do what we call autonomous money, right? So imagine AI agents managing your, corporate treasury, where they're negotiating FX rates in real time, liquidity optimization across rails overnight, moving value between coins, deposits, CBDCs based on, best returns, stability, risk, liquidity, all of those sorts of things, right? It's going to be far better than any humans or any complex system trying to manage, corporate treasury. So the biggest risk for banks isn't just digital currency, it's losing the customer relationship to AI-native ecosystems built on digital money, right? So as you said, programmable money that allows autonomous money where AI agents can do these, incredible things without the need for, or with very limited human oversight. Now, Pakistan, as I said, is in a very unique position where we have a lot of the rules, regulations, and pilots that have all arrived in the last 24 months, right? So first and foremost, we've got the rails in place, Rast, EasyPasa, JazzCash, almost 40 million users and wallets already available. Digital rupees already is in pilot. You've got the regulator, the Pakistan Virtual Asset Regulatory Authority stood up last year to license virtual assets. Rupee-backed stablecoin is in the works. And then we've got pilots going on with the digital rupee prototype, Prism Plus settlement, right? So we've got a lot of these things. Now, the question I would raise to you guys is, we have all of these pieces. Why is it still that sending money home costs up to 5% and takes days, right? When these rails to make it happen instantly are already in place. And this is not a trivial question, right? I mean, look at the number, right? $38.3 billion in remittances last year. A significant amount of the earnings of the country come from remittances. So it behooves us to make this process as easy, as seamless, as frictionless, and as programmable, right? The things I talked about in the last slide, as possible, because this is our lifeblood. So, what does this mean for Pakistani banks? So first of all, the threats, right? If you guys don't do this, the stable coins can capture the remittances corridor, right? I've already got fintechs working in Dubai and places like that that are starting to use stable coins for remittances. And there's a huge opportunity for Pakistani banks to jump in the fray as well. Otherwise, these guys are doing it. Deposit disintermediation, right? Money migrates to wallets and coins. As I said, AI native competitors can own the customer relationship if we don't. Cyber fraud and consumer protection, if it's not handled properly, can create huge turmoil, right? So I know a lot of people have talked about cybersecurity this morning, which is great. Also, if not handled properly, you could have depeg and volatility, right? So for example, even USDC, had a run when a bunch of its deposits were part of Silicon Valley Bank, and then there was an issue with it, right? So it actually lost its peg against the dollar. That could happen, and then that has catastrophic implications if you don't handle it properly. And then compliance failures, as we saw with the failure of Paytm in India. More interestingly, the opportunities are much more massive, right? Tokenized deposits, as I said, programmability that keeps the money on balance sheet. I strongly urge every bank in Pakistan to look at that. Custody and compliance, right? Every one of these digital wallets, every one of these, tokenized deposits, every one of these, custodial relationships will need custody, will need compliance, and that's where the Pakistani banks are uniquely capable of having an entirely new funding source that's, only going to be growing not just in Pakistan, but in the global economy. You have the opportunity to ship some of those 5 programmable products that I talked about, and many more, right? Those are just some examples, but those rails already exist, right? The opportunity I would ask for all of you is open your minds, be creative, try some, pilots, take some risks, accept failure, and see what works, what gets both your institutional customers as well as your consumers excited, right? Try those out. Sharia compliant digital money, right? I mean, there's a mandate here, I think, to have the country be riba free by 2028, and the Pakistani Ministry of Finance just released a playbook for how this is supposed to move forward. And the interesting thing is that when they talk about Sharia compliant money, when we look at programmable money and programmable digital money, that has the best way of complying with that than anything else out there. Right? And the fact that Pakistan has this mandate to do it over the next 2 years means that if we do it well, we can export it to the entire Muslim world, because the entire Muslim world needs this, and they do not have Sharia-compliant digital money. So that's an opportunity not just for the banks here, for their domestic market, but for the entire Muslim global market as well. So there's a massive opportunity there. The other thing that you guys have an opportunity for is that when JP Morgan or a Western bank has to do some of this work, they have to create the whole identity-based system from scratch, because we don't have a national ID card in the US, right? You guys do. You guys have Nadra, you guys have Rast, you guys have digital identity, you have a lot of the rails in place. So you have the entire distribution mechanism, right? You just have to, again, go back and create these innovative products, and then you have the distribution mechanism in place. And then if you engage the SBP and Pavara early on, you can make sure that the regulation is an enabler, not a disabler, to making all of this happen. Okay? So, in conclusion, I would say that what usually happens in emerging markets is that the playbook for success, right? I've seen it in many emerging markets, whether it's in Bangladesh, whether it's in India, whether it's in Mexico, all over the world. You usually, if a successful fintech will ride on existing rails, they'll solve one painful problem. To me, the painful problem here that's crying for innovative solutions is remittances, just because it's such a huge opportunity. The regulation can be an advantage. Trust always beats incentives, especially in emerging markets, because trust is the lifeblood of why this thing will be adopted at scale, right? And platforms win. What do we mean by platforms? I mean, I've been teaching platforms for the last 20 years at MIT, and platforms mean that if you can create network effects, right? Both cross-site and same-site network effects. The more people who use, for example, tokenized deposits, the more institutional customers who come in, the more other banks come in, right? So if you can create those kinds of network effects, that's a huge win for all of you guys. So the future of banking, as I said at the beginning, isn't just digital currency, it's what digital currency enables, which is intelligent money. And the banks that learn to program it will orchestrate the next financial ecosystem. Okay? Thank you.